My name is Mike Sullivan. I'm a former IRS agent and teaching instructor, and I've worked at IRS a decade. And today I'm going to talk to you about IRS tax relief and the 5 different programs available for tax relief. Welcome to my YouTube channel. I try to give you everything you need. I try to pull back the curtain and kind of get you inside IRS on certain cases so you can understand what's going on. Like I said, I've worked about 10,000 cases. I've been doing this a long time, and many people use the search engine tax relief. What is tax relief? Well, IRS has 5 ways to deal with your debt that in fact you have, and I'm going to go over each one of them so at least you understand that. Believe it or not, the first one is bankruptcy. You can file a Chapter 7 bankruptcy. There's rules and regulations, of course. The tax has to be 3 years or older, has to be assessed for at least 8 months, and your tax returns have got to be filed for 2 years. You have to meet all those conditions before you can file. That's one is bankruptcy. The second is you can have a statute of limitation blow on your case. The statute of limitation is 10 years. That's 10 years from the day IRS processed your tax return and put it on your computer. There's a lot of confusion about the 10 years. It is 10 years from your tax return. No, it's 10 years from the day you filed and IRS placed that on the computer system. How do you know when that is? You can go and pull an IRS transcript up and find out what your date of assessment is to find out how long that 10 years is up. Now, things extend the statute of limitations, such as a bankruptcy or litigation or a collection due process or waivers. Most people don't have this, but they just add a little more time to the statute. That's it. But you can go and ask us to pull a transcript, or you can go ahead and try to go to irs.gov and pull your own transcript up. The third program is called the currently non-collectible or hardship program. That I'm going to guess right now today, I've looked at some new numbers, 60% of the open inventory cases with Internal Revenue Service right now, collection cases, are going to wind up in currently non-collectible. So what does currently non-collectible mean? It means that IRS looked at a current financial statement on an IRS Form 433F or 433A along with the documentation. They want to make sure that financial statement that you give them very specifically, you give them is correct. They're going to want bank statements to prove that. They're going to want pay stubs. They're going to want a copy of your expenses. And if they look at that and they say, boy, they can't pay the tax, they'll suspend your case for 1, 2, 3 years, or sometimes that case goes in and guess what? It never, in fact, comes out. Just the pro and the con about that. The con is they're going to continue to take your refund every year unless you're smart enough to adjust your W-4, and interest and penalties continue to run on the debt. And remember, generally those cases come back out to the field. The 2 other programs are the IRS payment agreement or installment agreement. You can make one online if you want. If you got a more complicated case, you're going to probably want to call a tax professional because IRS may require a financial statement, and you do not want to give IRS a financial statement unless you can kind of be giving them a really open book. So you really need to get someone to help you with that. Or you can file an offer and compromise where you can settle your debt for pennies on a dollar. I taught the offer and compromise program. I know the offer compromise real well, and if you're looking to do that, you want to make sure you're qualified. IRS puts out a pre-qualifier tool. Go to irs.gov, pre-qualifier tool for the offer and compromise, and boom, it pulls up right there. If I were to look at your current financial statement on an IRS form, I'll tell you within, I don't know, 20 seconds whether you're a valid candidate for that offer and compromise. Just so you know, the base rule for offers and compromise, really important. Even my M&M man knows this. You must give IRS your total liquidity and all your assets. That's the base rule. So let's say, let me give you an example of that. Let's say if you were to sell everything and you return it to cash and you have $100,000 left. By the way, your home is discounted 20%. But let's say you have $100,000 left. IRS is not going to take any less than $100,000. So that program is predicated on IRS getting, listen to me, getting all your equity and then they look at your income and your expenses, and there's a formula to make sure that you stay within the means IRS wants you to live at. It's a little more complicated for that, but you may be able to qualify. So let's review again. You can file a Chapter 7, okay, if you want. You can go into bankruptcy. The statute may blow, the 10-year statute may blow. This happens on a lot of cases, by the way. You got the payment agreement, the hardship, and the offer and compromise. If you like what I am telling you, I'd appreciate you liking my video or leaving comments. If you leave a comment and you want a subject drill down, I'm happy really to do that. I do review my comments once a week. Happy if you subscribe and just listen. Thank you very much. I appreciate it. I look forward to hearing from you.